When preparing to buy a house, most people think about the down payment and the mortgage that they'll have to pay for. But it turns out that apart from that, there are a bunch of other costs, also known as closing costs, that you'll need to prepare for. And as many of you know, a few months ago, we bought our first condo here in Toronto for under $500,000. So in case you want to know how that went, you can later on click on this link up here that will take you to my series on house hunting under $500,000 in the GTA. Many of you have asked me in the comments what other costs apart from the down payment you have to pay if you want to purchase a house here in Canada. So in this video today, I wanted to share with you all the other things that you will need to pay for upfront. I noticed that online people use different ways to categorize closing costs. So to make it clearer, instead, I will use the term cash to close. So the cash, the money that you actually need to have prepared to close on your house. And later on towards the end of the video, I will also share with you a great tool that I use myself to get a better estimate on how much cash you need to close. So let's start. How much money did I need to close on my condo? In total, we had to prepare $38,000 in cash. And don't worry, I will break down all the components for you in this video. The first component is, of course, the down payment. We initially opted for a down payment of 5%, but because I was self-employed, the lender requested 6.5%. And this is really not a fixed number. It is really different on a case-by-case basis. So our down payment was about $30,000. Note that you can purchase a home with a down payment of just 5% if the purchase price of your home is below $500,000. If the purchase price of your home is above $500,000, then different percentage brackets will apply to the minimum down payment required. And next, there's this thing called sales tax on CMHC. Because our down payment was below 20%, we had to buy what's called mortgage default insurance, or also known as CMHC insurance. This insurance basically protects the lender in case the borrower defaults on his loan. And the percentage will depend on your loan to value ratio, or how much you borrow in relation to the purchase price, as you can see in this table over here. So with a down payment of 6.5%, our CMHC insurance was 4% of the purchase price, or approximately $18,000. I know, it's a lot. So this $18,000 CMHC insurance is a closing cost, but as it can be rolled into the mortgage, which we did, it does not necessarily have to be paid up front. But it is still a cost that you will need to consider because it will go into the principal amount, or the total loan that you will need to pay off over the years. So which part of this do you actually have to pay upfront? Well, the CMHC insurance amount itself can be rolled into the mortgage. The sales tax on it cannot be rolled into the mortgage. The sales tax on CMHC has to be paid upfront, and that is why it goes into cash to close. In Ontario, the provincial sales tax is 8%, so the sales tax that we needed to pay on CMHC insurance was about $1,400. But what about GST? And this brings me to the next point. Is there any GST on home purchases in Canada? And the answer is yes, but only for new homes. And as our home was not a new condo, there was no GST to be applied, luckily. The next component of cash to close is home inspection fees. We opted not to do a home inspection, although our condo was not brand new. It was very recently built in the past few years, so we decided just to skip that. But usually the reason you would do a home inspection is to ensure that the home is in good order, and for that you would pay a home inspector to do the job. And I think that this is especially, although not only, important for freehold properties such as detached properties. Since we bought a relatively new condo, we decided to just focus on the status certificate. The status certificate reviews the financial and legal status of the condo, and among others, ensures that the condo has enough funds to cover for an eventual repair. But if you want to do a home inspection for a condo you purchase, that is totally up to you. It usually costs anywhere between $400 to $500. It's not that much, but the costs do add up. What we decided to do is just to carefully inspect the condo ourselves together with the realtor twice, just to make sure that everything was in order with the unit, no loose door hinges or broken windows or broken appliances and so on. And of course, you could say that we were taking on some risk by not doing a home inspection, but we were willing to take it on. After inspecting everything ourselves, we were quite confident that everything was in order with our approximately 2-year-old studio unit. But yeah, whether or not to do a home inspection for a condo unit, that you'll have to decide for yourself. So $0 for this one. Next up, number 5 is land transfer tax. And this can be quite a chunk, but luckily because we are first-time home buyers, we only paid $3,500 approximately for this. But what is a land transfer tax anyway? In case you're not familiar with this, on RE/MAX here is defined as a tax that is levied by the government when ownership of a property is transferred from one owner to another. This tax is typically paid by the buyer of the property and is based on the property's purchase price. For Ontario, you can check out the land transfer tax here on this website. Here you can see that staggered percentages are applied to different amounts. You do not have to calculate this for yourself. Later on, I'll show you that tool that can calculate this automatically for you. So anyways, if we weren't first-time home buyers, if we had purchased a home before within the last, I think 5 years is the criteria here in Canada, then we would have paid about $12,000 in just land transfer tax. But yeah, luckily as first-time home buyers, we got this huge rebate and ended up only paying $3,500. Okay, our next item, and sometimes this can get a bit complicated, are the lawyer fees. And how much you pay in lawyer fees can largely depend on which lawyer you hire. In total, we paid $3,166 to our lawyer. This included HST, and this was not just the lawyer fee, but also included some other items. So how much did we pay just for the lawyer fee? The lawyer fee itself was $1,921, so almost $2,000. They coordinated with the realtor and the mortgage broker and took care of all the paperwork. They reviewed the status certificate for us and processed the title transfer to us until we got our keys and everything went smoothly. So if you can get a really great and reliable lawyer, I personally think that it is worth paying a couple $100s more, because that just gives you a peace of mind. So earlier I mentioned $3,166 in lawyer fees. So after I took out the actual chunk of lawyer fees of $1,921, what was the remaining $1,245 for that we also transferred to the lawyer? I'm not going to go into too much detail here, but here's a rough overview. So part of this $1,245 was the cost for title insurance, to purchase title insurance, which in our case was $218. The reason I lumped this together with the lawyer fees was because our lawyer was the one purchasing the title insurance for us, so we transferred the sum over to our lawyer together with his lawyer fees. But on most realtor websites and property calculators, you will see this item, title insurance, listed separately because technically it is not a lawyer fee, it is an insurance. So what is a title insurance and why do you definitely need it? Here's a great explanation on thinkinsure.ca. Title insurance protects commercial and residential property owners, so us. It is designed to protect the owners and lenders against losses related to property ownership or title. This type of coverage will cover you if there is a title dispute after the sale. And here's an example that makes it super clear. Let's say you are buying a home and there is a gap between your coverage while you wait for the title to be transferred. You find out that there was $22,000 left on the previous owner's mortgage. If you have it active, the insurance, your insurer will cover the cost. So note here that title insurance is different from home insurance, two totally different things. And I didn't know that in the beginning either. Home insurance protects you from things like fire, burglary, theft, damage to your property. That is also something that you will definitely need to purchase once you've bought your condo. So $1,166 minus $218 title insurance, there's a remaining $1,027. So what's that? The next item is disbursements, including HST. The disbursements were $1,027. So what in the world is this? These are basically expenses that the lawyer has while carrying out his service for us, which we reimburse to him. And again, there are many components that goes into disbursements. I'm not going to go into all of the details because honestly, I do not understand all of them myself, but here's a very rough overview. Disbursements include costs like search costs, admin fees, also registration fees. So these are must-haves. You cannot do without them, and bank transfer fees. So honestly, this was not something that we were 100% prepared for, because in the beginning we thought that our total lawyer fees, including disbursements, expenses, and everything, would amount to $2,000. But it turned out that the amount was closer to $3,000 plus. So my suggestion is that if you hire a lawyer, ask your lawyer in advance not only what the lawyer fees are, but also what the breakdown of all the other costs are, like for example disbursements and so on, so that you have a more accurate estimate of how much cash you will need to prepare, and you're not suddenly short $1,000, $1,500, or even $2,000. So our total lawyer fees, including title insurance, disbursements, everything to do with lawyer, is $3,166. Coming to our last point, the last component of cash to close are adjustments, for which we had to pay $65. But this amount can vary depending on your situation. So what are adjustments anyway? Here again, an article that explains it very well. On a resale home, adjustments consist of items already prepaid beyond the closing date by the seller that benefit the purchaser after the closing date, which are prorated, and a credit is given to the seller as an adjustment on closing. Some examples of closing adjustments on a resale home are for prepaid realty taxes, prepaid condominium fees if the property purchases a condominium, and fuel oil if property has an oil furnace. In our case, as per closing date, the seller had already paid for a certain amount of property taxes, and $11 of that should actually be our responsibility because we were closing towards the end of the month. There were a few days left, so for those few days, the amount of the property taxes was prorated. That amounted to $11. In addition to that, the seller also had already paid for the maintenance fees for that full month, so our portion that we were responsible for paying was about $54. So $54 plus $11 amounted to $65. So here you can see that adjustments do not always apply. Sometimes you will have to pay adjustments to the seller, but sometimes you are on the receiving end. Yeah, that was pretty much it. So now I'm just gonna summarize all the money that we paid upfront, the cash to close, so you have a better idea. Number one is down payment, approximately $30,000, sales tax on CMHC insurance, $1,400, GST $0, home inspection fees $0, land transfer tax $3,500, lawyer fees including title insurance $3,166, and finally adjustments $65. And that in total amounts to $38,131 cash that we needed to have prepared upfront to close on our condo. Note here that if you're buying a freehold property, a detached home, for example, there will be other expenses that I have not listed earlier. For example, septic tank and water test expenses, but because I have no experience with this, I'm not going to cover that in this video. You might want to have a much better estimate on how much cash to close you need. So for that, you can use this awesome calculator, which I also used in my home purchasing process. It's on Rate Hub, and let's just do an example together. So let's just say that you are purchasing a condo for $492,500 in Ontario. So I'll skip this whole portion on mortgage payments here, and I'll scroll down to the cash to close. So here you can see the calculation for land transfer tax. It would normally be $12,650 if you are not a first-time home buyer. But if you are a first-time home buyer, then you can click yes, and you can see the number magically reduced from the $12,000 something to only $4,175 because you get rebates on both the provincial as well as the municipal land transfer tax. And below here you can see that the cash needed to close is $32,997. It is very, very close to what I paid for closing on my home. Let us look at the details. So the down payment here, based on 5% down payment, is $24,625. Land transfer tax $4,175. The sales tax on mortgage insurance, which we talked about earlier, is $1,497. Okay, lawyer fees here by default, they put $1,000. Together with the title insurance, they allocated $1,900. So personally, I would budget an extra $500 to $1,000 depending on which lawyer you work with, of course. What you can also do is call up a lawyer in advance to get a better estimate on what the lawyer fees, including the expenses, disbursements, etc. will be. There's also a home inspection fee here. So if you want to do that, then $500 is a good estimate. right? So appraisal fees, in my case, I did not have a separate appraisal fee. Everything was already rolled into one fee by the lender. So adding up all the components, it amounts to $32,997. So if you're going to purchase a property, I would highly recommend using such a calculator. You can find it on many different property websites as soon as possible, so you can start preparing that cash. That was it for today, guys. I hope this video was useful to you. Please let me know in the comments what your thoughts and questions are. Also, what other videos you would like to see from me in the future. Thank you so much for watching. Enjoy the summer, and I'll see you soon in the next video. Bye. So $54 plus $11 amounted to $64. GST 0, home